I'm going to start on a new topic here, a new scanner, a new way to find the ends and beginning, the ends of trends. Okay, so this is a strategy I like to call make the end of the trend your friend. One of many technical indicators that we could be looking at. This one, relative strength index, measures the end of a trend. So you've heard this before, right? The trend is your friend. Hey, buddy. Yeah, we're friends. But what happens at the end? You no longer are friends. So the trend is your friend, except at the end. So this particular indicator measures the bullish buying pressure momentum versus the bears. So a market moves based on bullish, the bulls, the bullish traders interacting with the bearish traders. So it's a fight, in essence, between bullishness and bearishness. And the relative strength indicator is a momentum indicator that compares a security's strength on days when prices go up to days when it goes down. So it's a momentum indicator. It generates a chart that looks remarkably like this. There's an overbought condition and an oversold condition. All right, so what it is two thresholds. The lower threshold is 30. The upper threshold 70. So when this line here, the RSI line, which is measuring bullish and bearish momentum, and you can see here that as the bulls gain momentum, it drives this line up. And then what you'll see at these extremes here is that, you know, the bulls are winning, and then ultimately the bears take control and put us back into a bearish run. Markets don't go straight up, they don't go straight down. There's a dance between the bulls and the bears. That's a healthy market, and this indicator is useful in finding the extremes. Here's an example. So, I got to tell you, this is the most important part. When the line crosses, when the RSI line, in this case overbought, crosses beneath this upper threshold of 70, that's a bearish signal. So when the RSI line crosses beneath this upper 70 line, bearish signal. It's a signal. Here, when the RSI line crosses above, that's a bullish signal. So these lines are measuring the extremes, and when the extremes are crossed, the stock has either been overbought or oversold. Quite simple, really. And we have brokers, Tom's Tools, a lot of brokers, most of them will have, most charting packages will have the RSI. It's a very popular indicator, one of many that were built by Wells Wilder back in the 70s. All right, so here's an example of the signals I just mentioned. And these are all bearish crosses. See where the RSI line crosses below? Bearish, 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 bearish. I'm not going to say them all. There's another bearish one. And here's a bullish one where the RSI line crosses above 30. Now, if you look at the signals here, you can see here we got a little bit of a drop and a potential profit in the trade. Here, a little bit of a drop. Here, a little bit of a drop. Here, a little rise and then a drop. And then here, a failed signal. The stock actually signaled bearishness and then rose. And I wanted to put that in and emphasize that, because here's another one that really didn't pay off. A signal, the stock dropped and then rose immediately. Ultimately, it continued its drop. So the thing about RSI, like every other technical indicator, is that it works, except when it doesn't work. And so for that reason, you want to be concerned with confirming RSI with other technicals, just like all the other ones. We're going to look for overbought and oversold stocks. We're going to use a scanner. You don't need a scanner to, it's nice to have a scanner to get a list of overbought and oversold. We all have Tom's Tools. Most everybody on this call has Tom's Tools. And so, of course, we can use the power of those tools to find lists of stocks that are overbought and oversold. But the confirmation process for me is essential. Think about it. You're looking at a stock that's really running hard, and you're calling the end of that trend. So you're kind of jumping in front of the train a bit. So RSI will tell you when there's a contraction in the buying or selling pressure. There's a switch going on, but sometimes we get false signals. So really critical that you confirm with other technicals. So I'm going to hop into this indicator in Tom's tools, and it's called the Relative Strength Index Scanner. And I'm going to do all of this in a minute, but I wanted to give you the slides. The first thing I want to do when I use the scanner to detect when this happens is I'm going to look for the least number of days inside the RSI range. What does that mean? Let me back up here. So I want to catch it. I want to catch these signals, I'd say within 5 days after they happen. So I want to catch them here. I don't want to catch it down here. I want to catch it when it's just dropped below. It's been in the range below the upper limit of 70 for 1 to 5 days. So I want to catch it early. I don't want to catch it down here. First 5 days, first 2 days, however you want to use it. So I'll demonstrate that in a minute. So least days inside the RSI range will catch these opportunities right as they happen. Right as the RSI line crosses beneath the upper 70 line or above the lower 30 line. Now, the default limits are not default in Tom's tools. So when you pop in, you need to show the wizard criteria and make the upper RSI range 70 and the lower 30, just as I showed you on the chart. Use penny plus weekly. You can also use all optional stocks and indices if you like, and then confirm it with something else. Support, resistance, moving averages, trend lines, volume spikes, MACD, stochastics, DMI, something, at least one other thing, and hopefully many other things. Okay, with all that established, let's go into Tom's tools and let's start playing around with this stuff. When you hop into Tom's tools, this will be the screen you see. You want to go to stocks, stock rankers, and right on the top, there is RSI. Okay. So I've got, when you come in, most likely you're going to see this, but you need to see the wizard criteria. So you hit show, least stays inside the range. This is all in the slides I just showed you. Lower RSI 30, upper RSI 70. Change my stock list to penny plus weekly. This is kind of like the golden list. It gives us stocks whose options have slippage that are pennies wide, and also it includes stocks whose options have weekly expiration. So it's a really nice, tight, high, target-rich environment within which to scan. If you want to do everything you can, all optional stocks and indices. If you do that, though, be sure to check your slippage and make sure that there's plenty of liquidity in the options that you decide you want to trade. Okay, so I've got all the settings set up. Oops, I had a typo there. That's 70. All right, let's run the scanner. Let's see what comes back. Doesn't take long to run this scanner. Here's the days inside range. Here's the latest RSI. Of course, you got stock list and all that. The stock volume. It's sorted by days inside the range. So this one here, the RSI range, the latest RSI is 63.72, which means that it's just dropped below 70. And if you want to see it, you can click pick, and that'll show you the chart. So this is why you got to be careful on these things. Here's Vail. This thing is in a decidedly bullish trend, and we're considering going bearish on this trade. If you want to see the RSI, click chart. And what you'll see down below here is the RSI. So there's your 70 line. There's your 30 line. So the stock has just, the RSI, the stock has topped out, it's dropped, and the RSI is 1 day beneath the 70 line, indicating overbought, indicating that maybe the stock is ready to drop. It indicated here as well. Did the stock drop right after? A little bit, and then it went sideways. All right. Now, Let's look at the list again here. Let's see if we can find one. Now, this one here on UNG is a bullish cross. How do I know that? Well, the RSI, the latest RSI, is 30.93. If I pull up its chart, click the chart, you can see natural gas, UNG, has been in a decidedly bearish posture and looks like it's perhaps ready to pop back up. And then I come down here. This is why I knew it was a bullish cross above 30. But look, it's been doing it quite a few times with quite a few failed signals, let's call it. So it's not the panacea. I mean, it's not like you run this scan and go take trades. It's a nice confirming scanner. Now, what I would do here is, you know, this one here, the number of days inside range is how fresh it is. So these first 20 just crossed. The next set from here to here, these ones crossed 2 days ago. And then 3 and 4 and 5. So one thing you might want to play with is, let's just say I want the crosses to be no more than 5 days old. So I could take the top 5, and that's the last 5. We've got 48 stocks. So I go up here. All right, let's save these 48 stocks. In my stock list, they're at the ends of range. They're either overbought or oversold. They're not all bulls. They're not all bears either. So it's a nice little list that we can use to start to do some more analysis. So there's a lot you can do here. You can take the list, go through it one by one. You can even go to a stock chart in Tom's tools, and you can just put RSI on the chart. And the way you do that is you come to technical indicators and you select RSI, click update, and that'll be one of your indicators that is shown underneath the chart here. So I think there's a lot of value in just having RSI on a chart, particularly if you're looking at trading the ends of trends. I like these. I tell you where I like them the most. I like them most when I see a stock that has hit resistance and has dropped or dropped below support for a bear, or I look for a stock that has plummeted and has bounced above or cracked above a resistance level as a confirmation. Now, there was one on here. Let me see if I can see it here. Charter was one. We'll come back to that. So here's my list, and then you can go looking. Let's just say you trade calls and puts. You can click calls and puts. You can say, give me lowest percent to double. Now, some of these are going to be puts now. You got to check the RSI, but there's a lot of them that were bulls. Actually, there were more bears, actually. Let's go for bears. So lowest percent to double puts. And this is going to give us a list of candidates of bearish trades on the list of stocks that are overbought. We hit search. And wait for the scanner to come back. The other thing I didn't mention on the RSI and all the scanners in Tom's tools, if you ever want to know what's underneath the covers, you can always click the help button here, and that will walk you through what the scanner does, how to set it up, the parameters, the description of the headings on the scan results. But here's what's come up. Tips on the list here. Let's take a look at this stock chart.
Mike?
Yes.
You didn't use my stock list.
I didn't?
Search. No.
That would be useful. Thank you, buddy. My stock list. Here we go. That would help. Hit search. Slow down, Mikey. Gold is on the list here. Is gold ready to come down? I don't know, man. RSI says it is. If you want to see it, you go to chart. Gold's been doing that, though. Bearish cross. It goes up. Another bearish cross. The RSI is setting lower lows, though, over the last month or so, or the last few weeks. So it's a candidate. And so you always got to ask yourself the question, am I willing to buy a put on this stock? when it's got strong support at 178, 178, 178, resistance here. You got to be confident that that support level isn't going to hold. I see plenty of bullish indicators here to suggest that perhaps this is not the best possible trade on gold. All right, so that's the process. You can use other scanners under single strategy. You can use the vertical scanner. There it is. You can use credit spreads. Let's go after call credit spreads against my stock list. And let's go ahead and say short term. And let's hit search. Now, again, some of these might be bullish. And then we've got FCX on the chart. Let's look at a stock chart. FCX just had earnings. They were okay. The stock has had 2 days inside the bullish candle that's happened on earnings. Stocks in the range, perhaps sideways, but I don't see anything in the chart that would suggest this thing is quite ready to drop. So again, you want to confirm this overbought condition based on RSI with support and resistance. So 44 right here, support, 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 support. Certainly would not take this trade unless the stock was beneath 44. So let's go to a stock chart and take a look at FCX. Let me get rid of that one there. Let's take a look at FCX and hit update. And there's your RSI, 2 days beneath this signal line of 70. Perhaps we're going down, but again, you gotta, there are often failed signals and you must confirm. All right, now let's take a look at a couple others. I looked through these. I didn't see any that I really loved, but one I do want to cover with you is this one. I think this is a good opportunity. Charter. And I'll tell you why. Okay, so if you look at the RSI on Charter, yeah, that's nice. 2 days beneath, that might even be 1 day. 1 day or 2 days beneath the 70 line, overbought. The RSI line is contracting. The bears are starting to take over. And then you look on this chart. Earnings just happened. The stock dropped a little bit. And this is why I like this one, because there's a 200-day average here that acts as resistance on Charter. Yes, RSI says it's overbought, starting to come down. And then we have a confirmation indicator here that this 200-day average can act is acting as resistance. We can check volume as well. Oh, look at that. The volume on Friday was above average, and Charter has come down since. So this one is an example of where I would be very happy to sell a credit spread somewhere above the 200-day average, at or above the 200-day average. So the markets are open. Let's take a look at Charter, CHTR, and it's down. So Charter's down even more. So yeah, I'm liking this one. I don't like the Fed meeting on Wednesday though, but man, bullish run, earnings, flat earnings, stock starting to come down. Let's zoom in a little bit. So on this one, where do I want to sell? No higher, let's say no higher than the 200-day average. Zoom in a little bit more. The 200-day average, as let's call it 413, 412. So 415 would be kind of a no-brainer place to sell this credit spread. So let's take a look at what's the live pricing is. So 415, I want it now. Now look here, everybody. Slippage. The 415 calls that expire on Friday, Feb 3, are going for 35 cents times 80. That slippage is gargantuan. What is it? 200%, 100% slippage? It's a lot. It's what, 45 cents of slippage on an 80-cent option? Ain't no way. Here, $1 slippage here between 15 and $1.15. I'm not taking it. I'm not interested in high slippage. Let's go back to February 10th, which is a week from Friday, and the slippage there is quite massive. Looking at the open interest, there isn't a lot of open interest on these options, which is a little surprising to me. Let's go out to Feb 17, 18-day options. And yeah, slippage is max slippage on this $14.10 option should be $1.40. That's 10%. What's the slippage? $1.90. So slippage is too wide across the board. Checking the puts real quick as well. Similar, same deal. So charters off the table. However, it's a really nice setup. Let's do one other thing with our result set. So we've got the overbought and oversold list. Here's one other scan that I like. And I'll talk about the volume. I think I already have talking about the volume scan in a prior snipers call, but you can go to stock volume here. And we can take my stock list. These are all the overbought and oversold stocks, as you know. And I'm looking for an increase in volume by percentage. So then I can run a second confirming indicator and say, all right, I'm only interested in the trades that are coming to the end of their trend, maybe, and confirm that with additional volume. So the drop on a bullish trend or a rise on the bearish trend confirmed with volume. So this is where I found charter to begin the day. Let's take a look at UNG. Yeah, really beautiful volume spike that happened on Thursday on UNG right here. So that volume spike at the end of this trend could very well signal a bounce, a stopping point. RSI is suggesting maybe, but it's done that several times as the stock's gone sideways. It's kind of hanging. Let's see what UNG is doing right now. So literally, with a credit spread in particular, say, for example, you sold the 8 put spread, you are jumping in front of the train, quite literally jumping in front of a stock that has been dropping precipitously. And then today the stock's down a bit. So we'll see what the RSI, you can see what the RSI would look like at the top of the hour. So that's another confirming way to, call the end of a trend. We've got the United Kingdom index. Let's look at that one real quick here. Is that the end of a trend? It's going sideways. RSI, there's our bearish signal, new RSI low there. Let's take a look at the stock live. Symbol is EWU. See, we got a bullish crosser. You got to be careful with these, man. I'm telling you. Sideways. I'm not ready on this one. Let's check one more, and then we're going to look for some live setups.